According to Redfin, January was the most competitive month on record for home buyers. They're also faced with the fastest, most priciest market than ever before. New homes being placed on the market is down 12%. 42% of the homes that were sold, that were purchased in the month of January, sold for the full list price, if not more. Think about that. 42% sold for the list price or more. Hello and thank you for watching. I'm Wayne Turner, real estate broker, and have been for 25 years, coming to you with the most recent updated information in the first quarter of 2022. So now as we roll into the first quarter of 2022, interest rates are 3.5% to 3.6%. Now that's the largest jump that we've seen since March of 2020. So we're about 18 months since we've seen rates this high. Now, according to Redfin experts, they're predicting the rates to be around 4.3% by the end of the year. How quick that will happen, we don't know. But what we do know is the Federal Reserve is raising rates in an attempt to slow the economy, an attempt to slow down the purchasing. And quite simply, it's this, it's supply and demand. If more people want something, it increases the prices, houses included. Now, as rates rise, it makes those homeowners that live in houses, that have homes, and there's millions of them, that have a 4% fixed rate or less. And it makes them question, well, wait a minute, where am I going to go if I move? Where am I going to go if I sell my house? And I'm going to have to get a higher rate or close to a higher rate than what I already have. Now, Redfin states that newly listed homes were down 12% in January of 2022. And of course, the number of homes that sold fell to a record low, with the demand increasing at over 7%. Now, Glenn Kelman, the CEO of Redfin, said with the uptick in interest rates, we could still see inventory come on the market as we roll into spring. But this housing demand could last for at least another 5 years. Despite the uptick in mortgage rates, homebuyer demand is still at a record high with inventory at a record low. Now, homebuyers are faced with the fastest, priciest housing market than ever before. Now, a record 57% of the homes purchased in January had close to a $2,000 a month mortgage. However, that is a fixed rate mortgage, and it's still better than rent. And of course, the median sales price of a home jumping some 16%. You can kind of see how it all falters and is hand in hand. Now, the shortage of homes for sale is absolutely weighing on the housing market. That's the biggest reason why prices are going up. The demand is high, the supply is low, and when there's no homes on the market, the demand is high, you're going to get prices to increase. New listings have fallen 8% year over year, which is just a big driving force in prices of homes going up. Now, of course, when you raise rates, it's expected that you raise interest rates, you slow the demand of purchases. But the supply is so low that it takes months, if not years, to see the recovery in that. And it's not just individuals buying homes. Real estate investors are buying homes and buying properties up at a rapid pace like never before. Real estate investors bought a record 18.4% of the homes that were purchased in the fourth quarter of last year, which was up from 12.6% the year before. Now, this 18.4% was a record high number for investor purchased properties in the United States, fueling once again, even though interest rates are ticking up and the supply is low, the demand for housing is high. Now, mid-priced homes became very popular with investors, as 32% of the homes that they purchased were actually that mid-level, mid-priced homes. Depending on where you are in your market here, we're in Metro New Orleans area, we're looking at around $225 to $275 as a mid-priced home. However, the majority of these investors purchased properties, and they purchased a lower entry level, if you will, homes. Those homes that when someone's first kind of starting out on life, that first house that they go out and rent before they make the initial purchase. Maybe it's $1,400, $1,500, $1,200 a month in the rents, which is quite fascinating. When you think about that, a fifth of all the homes that were purchased in the last quarter of 2021, 20% of those homes were purchased by real estate investors who are not going to personally live in those properties. And according to Redfin, the leading cities for these was Jacksonville, Atlanta, and Charlotte. However, it's not just individuals buying properties to live in, and it's not just groups of investors or individual investors buying properties. So we have homeowners buying properties and investors buying properties. But what about the second home? That person buying a home for their vacation home. What does that look like? That demand is up 90% from just 2 years ago.
Inconceivable!
So think about that. There's the demand for someone to purchase a second home is up 90%. So let's look at the big picture. We have a record low of homes on the market. We have investors buying at record rates. We have purchasers buying second homes, vacation homes at record rates. And then we have people purchasing properties and homes that just simply want to make it their home and live in the property. Just in the month of January alone, the demand for a second home was up 87% from last year. Now, this demand kind of comes from people can now purchase a property, a second home, and you can deduct the interest on your second home as you can your primary residence. In addition, you can rent out that property in maybe a beach town or a beach city, and you can also do an Airbnb. So a lot of people are purchasing second homes. They'll live in them 3 months out of the year or maybe 2 months out of the year and rent them out the rest. Now, they do predict as interest rates continue to rise, they will see a fall in those second home purchases. No one will really know until we see it for ourselves as we roll into the second quarter of 2022. So what does all of this mean for you? What does it mean for me? What does it mean for us as people that looking to invest? If you're an investor, if you're a property owner, if you're looking to purchase a home, or if you're looking to sell your home. If you're looking to purchase a home, and you can ask anybody, ask your parents, your grandparents, what their interest rate was on their first mortgage, second mortgage, third mortgage. Even at a 4% rate, it's still pretty phenomenal to only have a 4% mortgage rate fixed for 30, or it's even lower on a 15-year mortgage. And I believe we've passed the crazy lows. I don't think I'll ever see, and I got a little gray in my beard, I'm 50 years old, I don't think I'll ever see a time when we have interest rates below 3% ever again. I may be wrong, but I think the 2.5% fixed rate for 30 years is long gone. And look, it did what it needed to do. It boosted the economy. Rates have been low for years now, and it's done just that. It has boosted our economy. And now, as we've zoomed past that goal to boost the economy, we're having to slow the horse and buggy down. It is absolutely blazing fast, and it's kind of having an effect on everybody, even down to a simple loaf of bread and a gallon of gasoline. Everything's going up. So I'm kind of with Glenn Kelman, the CEO of Redfin. I don't think we're going to see a huge shift in the way things are in terms of housing and real estate and the economy and the demand for some, possibly even 5 years. At the very minimum, it'll be a couple of years that we'll see this continue to move at a record pace. We will continue to see home appreciation 9, 10, 12, 15% as we roll into 2022. So what do you think will happen next with the housing market? I'd love to hear your thoughts. Let me know your take on it. I'm just curious to know what other people are thinking, what's going through their minds, what's going through your mind. What do you foresee happening into the future with the housing market? Until next time, thank you for watching, and please like, subscribe, and share this video.